This is Ag Matters PM from the Iowa Agribusiness Radio Network, brought to you by the Iowa Soybean Association, your daily recap of the information that affects Iowa's farmers, producers, and consumers, right here in the heart of the heartland. With reports from our award-winning broadcast team of Dustin Hoffman, Riley Smith, and Mark Magnuson. Now, from the IARN studios in Des Moines, here's Dustin Hoffman.
Well, hello, everyone, and welcome to Ag Matters PM from the Iowa Agribusiness Radio Network. I'm Dustin Hoffman. Today is Monday, May the 13th, 2024. So glad you could join us. Coming up a little later on in the program, we're going to get a biofuels and ethanol update from Emily Skor of Growth Energy. But first, let's go ahead and take a look at those markets.
It's time now for the Ag Matters PM Closing Market Summary, your source for market analysis and settlement prices from the day's trade in Chicago, courtesy of the folks at agmarket.net.
Well, we're at the end of another trading day here to start the week and talking with Robin Schmahl of agmarket.net. Robin, I know we got off to a slow start overnight with the grains. How did they fare today?
Well, it showed some strength. Corn was up a little bit. Obviously, May was up quite a bit more over 5 cents, and that goes off the board tomorrow. So we've got last trading day tomorrow for the May contracts and the grains, last trading day in the hogs as well. But that skewed that a little bit out of proportion. But otherwise, we were just a little bit higher, 2 cents, penny, some 2 cents, whatever. Both corn, soybeans up a little bit. The real strength came into the wheat market, and that was driven a lot by, it was a freeze again in Russia, and thinking that that's going to have a significant impact on their production, although some estimates are for not quite as much. And we know at times that there's concern that develops over freezing, and then in the end result, it doesn't really pan out that way, but they've had it a couple of times already. So that's really driven that wheat market. Of course, Kansas City wheat, the hard red winter wheat, that exceeded the soft red wheat. So, but they were in the over 20s, mid 20 cents higher. So they really carried the ball, and maybe that's what held corn price higher as well. Now, it's maybe a little bit too early yet for the delay in planting because of wet weather, but it is starting to get a little bit of a concern. And, of course, obviously the saying is rain makes grain, but, once we can plant a lot in a short period of time, but we are looking at something that's starting to get a little bit more of attention right now. And really the next 7 to 10 days really doesn't show a whole lot of change, a lot of different varying weather patterns coming across the country that's going to keep producers out of the field. Now, we had export inspections this morning. Not a lot there other than corn was significantly lower than last week at 36.9 million bushels. That was down 14.2 million bushels from last week. Beans at 14.9 million bushels, up 1.8 million bushels, and wheat at 13.5 million bushels. That was up 1 million bushels from last week. So not a lot coming out of that. Crop progress is where we kind of see more of the weather scenario. Corn planting is expected at 48% on the report this afternoon. Last year we were at 65%. We gained 12% for the week. That's the estimates. Soybeans, 38% is estimated to be in the ground, up 12% from last week and compared to 49% last year. Spring wheat at 62% done, up 15% for the week. That compares to 40% last year. So the spring wheat is really taking the lead, per se, if you want to say, as far as progress is concerned. And it's been a little bit better weather conditions up there, at least significantly better than last year. Winter wheat crop conditions, they're expecting 50% good to excellent. That compares to 29% a year ago. The flooding in Brazil is another thing that's been pretty prominent in the market. Now this they're acting to reduce crop potential. The estimate right now is for 1 million tons of soybeans may have been lost in Rio Grande do Sul, which is one of the large producing areas, possibly even more. I believe One firm is expecting maybe 3 times more than that, but that's hard to say right now. Some of the major processors have suspended operations there just because of some of the flooding. Then we have Argentina. They've had a big infestation of leafhopper that's been in the news. Now they're expecting a damage, the estimate for damage at $2 billion because of the leafhopper. The Rosario Grain Exchange cut their corn harvest forecast to 47.5 million tons compared to their initial estimate at the beginning of the year of 59 million tons. So that's a significant drop. So it's going to be interesting to see how this all pans out and how it's all going to work into this market right now. We do have some support really from the fundamental side, at least from these weather events, leafhopper events, planting progress that is seeming to build some underpinning or underlying support to this market. But we know we can change things fairly quickly, and planting can be done in a short period of time.
Now, moving over to the livestock side of things, cattle and hogs, they ended last week stronger. Did they continue this week?
Well, cattle, cash traded steady last week. And midday box beef was higher today, 371, higher for choice, select up 230. Cattle kind of struggled somewhat most of the day. We saw a little bit more of a lead by the feeder cattle, but they trimmed their initial gains quite substantially, but they still closed a little bit higher. Live cattle market struggled a little bit, being mixed close to the end of the day. 30 the purchases last week, 33% of those purchases were for deferred delivery. So we've had a number of weeks now where we've seen close to 30% cattle purchased for deferred delivery. So that may come to fruition this week, where packers just aren't going to be very aggressive out in the market. So the steady cattle cash trade last week was considered a victory, but with a number of weeks of them buying deferred deliveries, we might run into a wall, per se, if you want to say, where the feedlots will not be able to garner any higher cash out of the packers. So the box beef has been weaker. I mean, last week it was weaker, and that's a concern in that market. And if whether they're going to see continued weakness, whether we're going to see consumer demand be able to increase or stay steady, at least where it is, that's one of the things that's really a cloud hanging over that market. So the feeder cattle have been in a downtrend for about the last 2 weeks, and they made a real big effort today in order to turn that trend, but that did not happen with prices falling back. Live cattle have been in a sideways trading pattern. So a little bit of divergence there, and we just need to see more support in that cattle in the product market in order to maybe get some buying interest in the cattle. On the hog side, like I mentioned earlier, tomorrow's last trading day for May hogs. They opened higher, but over time they just came under some real pressure in the hog market, and June actually broke through support of last week, which is not a good technical sign for that market. Now, we've seen a little bit better interest in the cutout market or cutout values in hogs, but we've struggled a little bit last week on cash. We don't know what the cash is today because of packer confidentiality. I'm not going to make a guess as to what that could have shown, but we did see cutouts at midday up $1.58 because bellies were really strong. The June closing here is at the lowest close since February 14th. So that market does not really look real promising at this point in time. The funds actually reduced their long positions quite significantly over the last week with the commitment of traders report. So the overall idea in that hog market right now has been over the last 2 weeks is demand coming into summer. Now we should see typically higher prices coming into the May or the June, July contract months, and the futures do show that, but there's a real concern over if demand's going to be able to continue.
All right, Robin, a lot for us to be thinking about. And if folks want to talk about some of their strategies, get some marketing information, what's the best way for them to get in touch with agmarket.net?
Okay, they can call me directly if they'd like at 877-256-3253. They can go to our website, agmarket.net, and there's a 800-844 phone number there where they can call in and somebody would be glad to help them. Or they can actually send an email or through our website as well.
All right, Robin, we thanks so much for the insight, and we'll talk to you again later this week.
All right, thank you. It's always a pleasure.
Robin Schmahl of agmarket.net. Let's go ahead and take a look at the closing numbers on the Iowa Agribusiness Radio Network market screen.
July corn was up 2 3/4 at 472.5. July beans up a half at 12.19.5. Soy meal down $5.40 at 366.50. Soy oil up 71 cents at 45.15. Chicago wheat up 23.5 at 687 even. Kansas wheat up 26 3/4 at $7 even. Minneapolis wheat up 18 1/4 at 738 1/4. Oats up 15 1/4 at 426 even. June live cattle 57 cents lower at 175.57. Feeders up 57 cents at 239.37. Lean hogs for June down 90 cents at 97.47. Pork cutouts down 1/4 at 104.65. And Class 3 milk up 12 cents at 18.75.
And that's been our ag market recap. We're going to take a short break and hear from our sponsor, the Iowa Soybean Association and the Soy Checkoff. When we come back, we'll talk with Emily Skor of Growth Energy. This is Ag Matters PM.
Iowa Soybean Association is driven to deliver for Iowa's 40,000 soybean farmers. We're proud to provide objective agronomic research, a helping hand with soil and water stewardship, and timely industry news powered by the Soybean Checkoff. Learn more at iasoybeans.com.
Welcome back to AMPM from the Iowa Agribusiness Radio Network. I'm Dustin Huffman. Well, I was out in Washington, D.C. a couple weeks ago. I had the chance to sit down with Emily Skor, CEO of Growth Energy, and we talked about where things are in the progress of the ethanol industry, both in policy and in innovation. Here's what she had to say. Agribusiness Radio Network, and I'm here with Emily Skor, Growth Energy CEO, and it took us 600 days, Emily. We finally got that stinking thing through the EPA, but still didn't get the whole year solution, the whole year-round solution figured out and countrywide solution figured out. But let's start first about the thing that happened with the Midwest states. We finally got that approved, a long time coming. How good is that for the industry right now?
So you're talking about the approval of the 8
Yes.
Midwestern states. So yes, starting next summer, 8 states in the Midwest will have the ability from that point forward in perpetuity to sell E15, no questions asked, no hiccups, no hurdles. So that's fantastic. But that only covers about 15% of the total U.S. fuel marketplace. So we need a solution that allows drivers in all 50 states to be able to fuel up on E15. We've got 3 bills in Congress. The most recent bill introduced is a compromise bill, so we ultimately do need a federal fix. But it's exciting to see that these, and my thanks to these Midwestern governors, because the governors said, EPA, we're going to opt out of your program. It doesn't work for my state. It doesn't work for my economy. So good news on that front, but we still need that federal fix.
And we got the emergency waiver to start in 24, which does help. But again, it's the federal fix, and we haven't even heard so much that there's going to be an emergency waiver for the country yet. Have we yet for 2024 for the summer?
So we did get the announcement. So we did get the announcement April 19th.
It must have been the same day as the other one.
Yeah.
So all runs together.
Yes. So the good news is, and again, thanks to our champions for pressing the Biden administration, they did issue a waiver that allows E15 to be sold this summer in all 50 states. So that's good news.
Mm-hmm.
And I think, the supply chain was anticipating this waiver, so we should have minimal disruption. Right. I think consumers will be able to fill up on E15, no problem from this point through the summer. But again, that waiver just applies to the summer. We do need that federal legislative fix. That's the next step. So good news, we're covered for the next 12 months. And then we've got to make sure that we have a solution in place for summer 2025.
What kind of odds are we getting right now on some of these bills?
Well, it's frustrating. I feel like we've lost a little momentum. Actually, you've got a few senators. Senator Carper of Delaware, who is the chairman of the committee, and he needs to work with his colleagues and have a hearing for this bill and move it forward. You've got a lot of consensus. the vast majority of the fuel supply chain supports this legislative piece. We've just got to get it done. You've got a few people who are dug in and have the ear of particular senators to be able to hold them in their support. But we need bipartisan collaboration, and we need Democrats to talk to their colleagues to get this bill moving.
And then moving on, sustainable aviation fuel, obviously the big deal. Just got the GREET model announcement that's coming here very soon. How big is that going to be for us to get the ball rolling and get this down?
Well, potentially, we'll see. Sustainable aviation fuel is a huge opportunity for us, for the bioeconomy, for bioethanol as a feedstock. Ethanol is the only feedstock available in enough volume to meet the demands of the marketplace and the grand challenge set forth by the Biden administration. But we need guidance from Treasury Department. And it's forthcoming, it should be any moment, but it really has to make sure that how they measure the carbon intensity, they stick to the sound science, they don't vary from the sound science, and they give us optimum flexibility. If we're going to do climate smart ag practices and get credits for that, give the farmer flexibility to pick and choose what works best in his or her region on their farm with their soil. So we need flexibility, we need maximum clarity. If we get that, I think you'll see some steel in the ground and some investments will continue to move forward. If not, I think we're going to be waiting for the next guidance on the next tax credit, the Clean Fuel Production Tax Credit. Hopefully we'll get something on that by the end of the year.
And when we were at the Renewable Fuel Summit earlier this year, the airline industry's there. They're telling us how they're chomping at the bit to get this going, because right now we're getting the stuff, the graded ethanol that we need. We're having to import right now from Brazil to make this work. I mean, even some of our own states are importing ethanol from Brazil. We need to be able to get this going here. And of course, that opens up a whole other discussion. That's carbon sequestration.
You're absolutely right. If we are not allowed to participate in the marketplace, then you're going to be using feedstock from Brazilian sugarcane ethanol or used cooking oil that's going to be imported from China. We want to make sure that this is the most robust it can be for the American economy. And so, again, we've got to get those tax signals right on the sustainable aviation fuel tax credits, because we have the ability to do this, but we need clarity and certainty, because these are hundreds of millions of dollars of investments that we're talking about. And the industry is poised, they're ready to do it, but we've got to see that clear signal from Washington that says, yeah, we're serious about supporting the American farmer, and that the Treasury Department follows through on the pledge that the president said last summer, which is 95% of sustainable aviation fuel will come from the American farmer. All right, we want to make that happen, but we need clarity.
All right. Anything else our Iowa producers need to know right now?
I think that's the big stuff.
All right. Well, Emily, thanks so much for giving us an update.
Thank you.
And that was Emily Skor, CEO of Growth Energy. And that brings us to the end of today's program. You can find all our content online at iowaagnet.com. Follow us on Facebook, X, LinkedIn, and on our YouTube channel. While you're there, subscribe and hit the bell icon so you're notified each time we put out a new video project. Don't forget about our free market podcast delivered right to your mobile device 3 times a day with analysis at the openings, middays, and closings. You can also find that on Amazon, Apple, Spotify, Google, and Podbean. From the IARN studios in Des Moines, I'm Dustin Huffman. For Mark Magnuson, Andy Peterson, and Riley Smith, we thank you for watching. This has been Ag Matters PM.